Why isn't it working? It says live. Okay, is it working now?
Let's see.
Oh, actually, here you go.
No.
How about now?
Let me refresh. I think it's live now. I see the sign on my YouTube. There we go. Yeah, you're live now.
Alright, perfect.
Yeah.
There we go. I think in the settings I have put it to private by accident.
Do you want us to stay on the Zoom side?
Yeah.
Does it make sense? Okay.
Yeah. Alright, cool. So let's go ahead and...
Are we starting just barely? Sorry, I know we're like, are we starting just right now?
Yeah.
Okay, cool.
Alright, give me 1 second, let me just put it up. I figured we've done US 30 a lot, so we should try out gold because a lot of people trade that as well. So that's what we're gonna do.
Feels so much earlier.
What's that?
It's 6:30, but it feels like it's like 5.
Oh yeah. Yes, it does. I agree.
Yeah.
Alright, so as always, feel free to hop in. Also, you have any questions or anything like that, everything stays the same. Ask your questions, hop in, take trades, anything like that. Alright, we're going to start off from higher time frames and move down. So we're going to start off here on the weekly time frame. This is gold back in 2023. So first week or second week of November in 2023. The reason why I want to go over this is because, like I said, I'm going to give you guys the entire outlook for November today. So I've already posted next week's weekly outlook on Teachable for you guys. So you guys should have access to that. I'm going to give you the entire outlook for November as well, give you some key fundamentals to watch out for. But usually, like starting November and then going obviously into like December, you see some volatility in the market. This year's November is going to be very important because of the massive economic data releases that we're getting. But on top of that, we also have the elections going on in the US, and you have a lot of geopolitical things happening in general, right? So you can expect gold to be quite volatile in that sense. So there's going to be a lot happening, but today we're just going to focus on more of the technical aspect of how the market moves when it gets closer to the end of the year and the last quarter. Okay, so starting off now from the weekly time frame, zoom out a little bit. Essentially what we're doing is still maintaining this bullish structure, right, from 2018. Price came up and it still tested structure and then pushed right back up. But for the longest time, what we have been doing is sitting in this little consolidation area. So you have that consolidation resistance, and we'll narrow this down as we drop down to lower time frames. I'm just mapping out some of the key major levels that you pretty much just see right now based off of higher time frames. So tapped into that resistance area for that consolidation, and then we came back down, and it seems like we're also sitting in a little support area right around here. So what price has done historically is come up, rejected into that area, give you some sort of retracement, and then it respects the support area here, pushes up as a little corrective move, and then comes right back down, right? And then same thing here when price came back here, held onto this area of support, gave you a corrective move just to reject right into that resistance, consolidation resistance once again, and then pulls right back down. Same thing here, once we reject here, price comes back down, holds onto a support, gives you a rejection, and then pulls right back down. So what we have done now is rejected in here, and now what we're looking for is opportunities of price trying to push back up into that area. But again, that only comes from the fact that we're still holding on to the support, and historically that is how price has reacted here, right? If price breaks below that, then obviously we're going to take advantage of the sell opportunities as well as price continues pushing. But as of right now, what we're doing is just watching what has price done in the past, and what we're going to try to do is just mimic that momentum. Any questions about that?
No.
Perfect. So let's zoom in here a little bit and start marking out levels. So we have a support area. Currently on the weekly time frame, we have a bottom wick rejection, so that's the area that I'm going to mark off. I won't be entertaining any sell opportunities when it comes to swing trades or longer term trades unless price can break its own bottom wick here. And then otherwise we're looking for those buy opportunities to the upside. Now what I'm going to do is mark off levels that are the most recent that price will need to approach at the moment before we can start looking for continued trade opportunities. So what you would be doing as you drop down to lower time frames, this is a weekly time frame, so any levels that you mark off right now are going to take a few days to reach, even a little bit of a longer time. There probably won't be those scalp opportunities, 15 minutes, you get in, you get out kind of thing. Instead, the levels that you're going to mark off here, when you drop down to lower time frames, you're going to keep it in the back of your mind that these are stronger levels because they're from higher time frames. So price is going to be a lot more reactive here. So what I'm going to do is mark off the most recent level that price needs to tap into prior its bullish run up, or reject and then come right back down. So that would be right around here. That resistance right at that level, when price did retrace and then came right back down, it retraced right into that area, closed right at that 1961 mark, and then came right back down once again, and it's cutting through all this little consolidation that we have been seeing based off of just higher time frame analysis. If price clears above here, then we're looking for continued trade opportunities to the upside, coming back into that consolidation zone, that resistance. If not, this is our range at the moment that we're trading in for this week. Now coming on to what I want to do actually is adjust that. Okay, there you go. That's the price level, that's the ask line. So same thing here, I'm going to drop down to lower time frames. I'm going to confirm what's essentially happening here if my levels pretty much line up according to the weekly time frame, and if there's any other minor levels that I need to be careful of. So zooming out just a little bit, for the most part it's the same exact price action that we have been seeing. Just on the daily time frame, you're going to see a little bit more candles because it is a lower time frame. So that's the same exact area that we had our support in. This new daily candle supports that momentum as well. Same thing, not looking for a trade opportunity just yet, but what I would want to see as the new daily candle starts forming is whether or not price can break its own high here and then continue to the upside. So all I'm doing is starting off my zone with that top wick rejection on the previous daily candle and then extending it out to the left to see if this level also is significant in the sense that it has been, or other price action to the left has been reactive here in general. So the more I extend it out, the more we see is that price has held onto a support here and then starting to push right back up into that level. Same thing here, as we come closer to it, you have price pushing down, gives you a nice retest, and it's a straight meltdown, right? Same thing here, price comes up, consolidates for a little bit, and then another nice push down, top wick rejection, push down. So what I would want to see for continued buy opportunity, for my safest buy opportunities, is price to break this previous daily high and out of that zone, so then we have those clean buy opportunities to the upside. Every time we have seen price fail to break above those areas, we have seen price come right back down, right? So that's how you would avoid entering any sort of fake out or anything like that based off of the daily time frame. Other than that, that level still checks out here. We have been seeing price holding onto a support, give you a break and retest, push back down. That resistance area here as well, resistance, support, resistance, and then here a break and retest and then continuation down. So I want to see zone clear, and then that would be the next level that I would be targeting for any buy opportunities. Come onto the 4-hour time frame, we start to see a little bit of consolidation. So we know that whenever price does break out, there's going to be some sort of volume that will follow. And you have a lot of other historical price action momentums that you can refer back to. So for example, you had consolidation here, and then a nice break up to the upside, consolidation right into this area. When price finally did break out of it, give you a retest with all of this, and then a nice momentum to the upside. Same thing here, consolidation, and then price pushes back down. As price comes back closer to the current levels, same thing, consolidation right around this zone, and then a push back up for a retest of that short-term bearish structure. So higher time frame structure is still quite bullish here on gold, and that's what we're going to follow when we start looking for our trade opportunities as we drop down to lower time frames. Alright, now coming on to the hourly time frame, pretty much the same thing. We're just waiting for price to do its own thing. It's consolidating here. So if price is consolidating on the 4-hour time frame, usually I'm not looking for trades on lower time frames because I don't want to take just 10-15 pip scalps. I want to look for a trade that I can turn into a longer term trade, so into a swing trade or a day trade, and that gives me more opportunity to look for, you know, a tighter stop loss and a better entry in general, where I can just let runners go and also take partials along the way and add on to those positions, right? So for that reason, if the 4-hour is consolidating, I don't usually drop down to lower time frames and look for trade opportunities. Instead, I will wait for price to break out of that 4-hour consolidation, and then I drop down to lower time frames to take my entries and also adjust my stop loss areas. So with that being said, we are gonna just start playing this here and see where's price headed. So this is in the beginning of the week, November 13th, 2023. We can also take a look at news. So today it seems like it's going to be quite low impact news. We might get some momentum, not too much. And then let's check out the rest of the week. So tomorrow we have core CPI coming out from the US. Then you also have CPI coming out as well. We're expecting it to grow at the same pace as previously at that 0.3%. And then CPI month over month, we're expecting to grow by 0.1%, so a little bit of slower pace than previous. And around this time, we usually know that inflation does tend to increase, or consumer spending tends to increase as well, since we're getting closer to holidays. So those are things that you can just expect almost every November and December. And then you have the following day, you have core PPI coming out. Same thing, inflation increasing by 0.3%. Core retail sales, we're expecting that to drop. PPI month over month increasing by 0.1%. And let's see how we're ending off the week then. Unemployment claims, we're expecting that to increase a little bit. That's pretty much it going into Friday. So Tuesday, Wednesday, and Thursday are going to be the main days that we're going to be trading this pair, because that's when we have that high impact news coming out. So inflation and unemployment, which we know are the key data points that the Fed was also watching during that time. Yeah, go ahead, Marby.
For news on the retail side,
Yeah.
is that including like Black Friday shopping?
Yeah, so any like consumer expenditures are essentially happening, but the data points that we're seeing here, it's not like future forecasting. The data points here are usually the previous month or the previous week. Like for example, unemployment claims is previous week. The retail sales most likely are from month to month, so it's last month, so October.
Oh, okay.
And you can confirm that usually, like even on Forex Factory. So when you open up that folder on Forex Factory, it says last month, and it'll give you like the time range as well. Yeah, so ignoring the data points. But if you just open up this folder here, it says month to month, and it'll tell you release monthly about 16 days after the month ends. So this is for October. Alright, let's also confirm the session. So let's go ahead and try to trade New York session. Is there anyone who trades London session here? Alright, we'll go ahead and skip to New York then, since that's what majority of us trade. Alright, so there's your New York Open. And in about an hour and a half, you're going to get the New York Stock Exchange open. So that's when we expect more volume to kick in. So all of London session, when the market opened up, we ended up just consolidating down here. So not much of a trade opportunity, as you can see. And we don't have any other fundamental or economic data coming out for another 46 minutes. So drop down to some of these lower time frames. Do you guys want to watch what happens on Monday, or do you guys want to go ahead and skip over to Tuesday when we would be trading normally?
Well, when you skip in, we'll kind of see what happens on Monday, right?
Yeah, you'll still see what happens. It's just that we obviously don't trade on Monday if there's like no impact or no news coming out.
Then yeah,
Okay.
Tuesday.
Alright, so this is still Monday. Alright, now we're here on Tuesday. Let's do sessions. Alright, here is New York Open on Tuesday. So in about 30 minutes we have core CPI coming out. This is usually when we would be starting and trading our session. So we have finally tapped into that area, pushed right out of that consolidation. Now we're consolidating right above here. Based off the hourly time frame, a lot of consolidation here as well. Now what you would be doing is updating your levels. So what we're going to do is price has clearly broken out of that consolidation area. Now you mark up what's the next level that you want price to break out of. I'm going to leave this zone here just so we have something to refer to. But usually in the live markets, when I'm coming back onto the charts, I clear everything and then I'll mark it up again. But I'm just going to leave this in reference to, you know, what did we start with in the beginning of the week, just so you guys can also follow along there. So based off the 4-hour time frame, now what we're looking for is, can price completely clear out of this area here, which is that 4-hour consolidation right there, and also these top wick rejections based off of the 4-hour time frame. So once price clears out of this, then we have those clean buy opportunities to the upside. And the further you go back, the more clean price action that we are seeing above this area here anyways. You drop down to the hourly time frame, you can narrow your zones in even more when you drop down to lower time frame. So I'm going to narrow it in just a bit more here. And same thing, when price breaks out of it, we have that clean price action to the upside, and that's what we would be targeting. So as of right now, the buy confirmations have gotten a little bit stronger just because of the fact that we consolidated here, and now we're finally breaking out of this, pushing back up, consolidating here a little bit more, potentially generating more liquidity prior to a continuation in one direction or another. Let's also keep the news up here. So we're going to see how news is pretty much setting up for what we are forecasting here for the CPI, and how news in general sets up for, or the charts set up for news in general. I'm just now seeing your guys' chat here on Zoom. Oh shit, Pat's here. Haven't seen you in a very long time. How's it going?
Hey VJ, how you doing? Yeah, it's been a while. Sorry, it's hard to speak because I have my little one here with me. It's a bit chaotic. How you doing?
I'm good. How's the little one growing?
Yeah, he's making life quite interesting. That's
I hope in a good way.
that's an understatement.
Yeah.
No, but we're good. We're good. Thanks. It's just been a crazy busy period, so I haven't been able to attend too many of the sessions. But I'm hoping I can, sneak in. Oh my God! Stop! Oh my God! Sorry, BJ.
No worries.
Let me go. Let me go.
You're good. You're good. Alright, we have just less than 15 minutes right before the news comes out. So what we have done is price has pretty much come back down into that support area, closed back up bullish, and now we're waiting for price to continue breaking past these areas prior to an entry. So given that we are expecting inflation to continue increasing, I do think that we're going to have enough momentum to at least tap into this area, and then we're going to wait for continued momentum to the upside. Alright, we have about 9 minutes. So we're going to check across different time frames as well, make sure that they're all pretty much in line. Yeah, so even on the daily, yesterday on Monday we closed with breaking the lows and the highs, and then there's a very high chance that we're going to continue that volatility to the upside now because price did close up bullish above that area. This new one, we have not broken the previous highs yet. We made a little bit of a bottom wick though, as you can see. So now we just want price to break above that previous daily high. That's your trade opportunity to the upside. 4-hour time frame, pretty much the same thing. Respected a support here and then continued to the upside. 1-hour time frame, broke the previous 1-hour lows, but still respecting the support now, so the new form support. And then let's see if we can continue breaking those highs into the upside. So we have about 4 minutes before news is coming out here, and it seems like we're expecting price to continue pushing up. I do want to be careful because price is still in a consolidation level, so make sure that we're not entering a trade too fast. We're going to make sure that price kind of does its own thing prior to an entry. Alright, 2 minutes. And we'll bring that here. New risk percentage on visual mode. Usually around this time, if you guys, like, we've been trading for a very long time together anyways, so you couldn't drop down to the 5 minute, 1 hour, 1 minute and things like that, but you don't take entries on those time frames. So I know we've done a lot of simulation sessions where we drop down to the 5 minute, 1 minute, but instead of taking entries there, we use that as confirmation of where's price headed when there's such high impact news coming out. So here clearly we've had Inflation still increasing at a little bit of slower pace, month to month staying at the same level as previous, so that's what that 0% means. And then the year over year, you have that increasing at a slower pace than previous as well. Hence, you come back, grab that liquidity, price is pushing up. We're not taking an entry on this candle because even if you take an entry here, where would you place your stop loss? That's way too wide. So we're gonna wait for price to pretty much do its thing here and then look for a better entry. So instead of getting FOMO on this candle, you just understand what is it doing based off a higher time frame analysis. And then that means that there's a very high chance that price will have no problem breaking past this 1961 mark. So if we can get a better entry point, that would most likely now turn into our partial instead of our TP. And then now we have a bigger range where price can potentially come back and tap into these higher time frame levels. So based off the daily or 4-hour time frame, for example, that could be another level that price can, absolutely come back and tap into with no problem. So we're not gonna get FOMO off this one candle. We're just gonna wait for a better entry, get a tighter stop loss, take some partials potentially around here, let runners go, and even have another scaling opportunity. Everyone okay with me skipping on this 15-minute candle since we're not taking an entry on it anyways?
Yeah, I had a question.
Yeah.
So on the simulation session, you have it set up so that when you take a buy or sell, you put your risk amount.
Mm-hmm.
When you're live, do you have a tool that does that for you already, or do you calculate your risk based on your stop loss, like by hand?
What I do is right before I'm about to take an entry, so like for example on this candle, I wouldn't take an entry on this one, right? But for the next one, you know how they have the long and the short tool on TradingView? So I would just mark that up and first see like where would I be comfortable placing my stop loss. And it's usually not anything, bigger. When you're looking at currencies, for example, we'll just talk about pips. It's not anything bigger than maybe 15, 20 pips or something like that for most of the time, right? So that's where I would feel comfortable, and then based off of that is how I take my entries. So here, like in the simulation sessions, I'm just showing you guys how to do it based off of the candle anatomies and the candle structure and price action, because that's just a little bit easier for people to pick up on when it comes to technical analysis. But then I also incorporate the strategy, like my own strategy of how to take those entries based off of, what are you comfortable risking. I know a lot of people also use like magic keys or something else like that helps them. But if you don't have that, or you're just starting into like technical analysis, then this is the way that I would do it.
Yeah, that's why I was asking. Because I have seen like the magic keys before.
Mm-hmm.
I'm okay if I don't have that. I
Yeah.
might do that stuff quickly.
Yeah. I think we're gonna have a pretty good trade the way that higher time frames are setting up as well, and their structure is still quite bullish. We have 5 minutes until this 15 closes. So let's see how this one closes and how the next one sets up, and that's a potential entry. Alright, just have about 4 minutes. Alright, we made a nice bottom wick rejection here. Trying to push back up. We have the last 3 to 2 minutes left here. What I would want to see as price is breaking out of here is some strong momentum to the upside. So no consolidation essentially forming here. Either we get a break and retest, or this candle flips and then closes bullish and the next one breaks the high and continues pushing. Then I would be comfortable taking a trade on the next one for any potential buy opportunities. If price ends up consolidating here, then I would not be taking an opportunity here based off the 15 and 30, but we can drop over, we can come up to higher time frames, and based off of higher time frames, as you can see, even the daily pushing up, so it broke the previous high here. We didn't take that entry because our stop loss would have been somewhere down here, which is way too wide at that point. But we still have good momentum to the upside. So after price makes that bottom wick and pushes back up, we know that we have that good momentum to the upside that we can take advantage of. Alright, so the previous 15 came back down, closed bearish. Let's see how this candle moves. It should not be breaking the previous low here. If it is going to flip back up and continue bullish, and then as price breaks these highs here, then I would be more comfortable placing my stop loss somewhere around here, and then use higher time frames to place my TP.
Vijay, can I ask a quick question? It's a follow-up question from, I think, the last session. Somebody else asked about whether you use trading alerts or not, and I think your response was for the low time frames, or you don't use trading alerts below the 4-hour anymore, or something to that effect.
Yeah, so when I'm like identifying, potential swing trade opportunities, I'll use it for that, which is like the 4-hour time frames and stuff. But anything lower than that, like just for scalping, I wouldn't use an alert. If I don't take a trade while I'm at the charts that day, then I'm just not taking a trade. But based off of like the 4-hour time frame, I'll put an alert because those are my swing trade entries.
Sure. So when pretty much when that alert goes off, does that mean now you're gonna be sitting in front of the charts for the next hour or so? Does that usher in your trading time for the day? Because on the higher time frames, for things to play out, you still need to wait a while, right? So how does that work?
So based off of like, for example, like the 4-hour time frame, let's say if CPI had not come out and like I kind of just walked away from the charts at the moment, just saying like, okay, based off the 4-hour time frame, if price clears above this area, or like the daily time frame, it clears above that area, at that time, like I'm not sitting on the charts for a very long time. I'm just coming back, taking a look at, okay, what has price done to reach my level at that time? So did it consolidate and then it was just a breakout and that breakout triggered my alert? Or did it actually have the break and retest and it was, giving me those nice momentums, and then this is the candle, for example, that broke through my level? I would be comfortable just taking my entry based off of that then.
Oh, I see. Okay. I see. Yeah, that's quite advanced. Okay.
Yeah, so for my swing trade opportunities, there's never a point where I'm coming back onto the charts and just sitting there for a very long time to take an entry. The point of the higher time frame alerts is that I don't have to spend a lot of time.
Gotcha. Okay, thank you.
Yeah, for sure. So on this 15-minute time frame, taking an entry here where price already made that bottom wick rejection, it's pushing up quite bullish, right? Placing my stop loss right below the current 15-minute and pretty much right at the level of the previous 15-minute right here as well. The reason why I have a tight stop loss like that is because price should not be breaking below the previous 15-minute if it is going to continue pushing up bullish. We also have confirmation from the other higher time frames. 15-minute, same thing. It's pretty much right below this 15-minute bottom wick rejection, and then price pushing up from there. Hourly time frame, still maintaining that bullish momentum where we broke the highs and the lows, and we broke out of this multi-hour consolidation. So the current 1 hour, same thing, makes a bottom wick, pushes back up. As I said, based off of higher time frames on the 4-hour daily, We broke out of that consolidation with a liquidity grab. Price should have no problem breaking past this 1961 mark, but that would be our partial level. And then I'm keeping my TP up above here, right below the zone where there was a little support area being formed here on the 4-hour time frame. On the daily time frame, it's pretty much the support where you had that consolidation being formed here, and then this was the support for this daily time frame before price reversed back down. Any questions on that one? And it's almost a 4.6 to risk to reward. This is a 1% entry, 1% risk off of $1,000 account. If anyone wants to take an entry here as with me, feel free. The max we're going to do is 3% on any given trade. So, we can have 2 more people also join in if they would like. Anyone else want to join in here? All right. Yeah, this is going to be saved and posted on YouTube for people to come back and watch again. And then let's come on to sessions. So we're still sitting in the New York session. And I can speed this up a little bit as well, just for time's sake. So in about 15 minutes is when you would have the New York Stock Exchange open up here. And for the rest of the day, we don't have much else coming out from the US until tomorrow on Wednesday when you have PPI coming out. So at this point, you're pretty much just letting your trade run. So now we have broken above the previous 1 hour high as well. And we're kind of just hanging in this area. We want to see a continued momentum here so we can take partials and then adjust our stop loss. We're pushing it with pretty good volume here. And then we have about 7 minutes before the stock exchange opens. Let's see where this candle closes in the next few minutes. Got about 30 seconds left. Alright, we have the new candle forming here. So 15 minutes, still close quite bullish after rejecting right into that area. Same thing here. This candle should not be breaking past the previous lows if we're going to continue pushing bullish. I would not be taking an entry or scaling or anything like that just yet until I see that price has cleared above this area, and then we look for a proper retest and then a continuation up. But other than that, I do think we don't have any problem kind of just tapping into this area just yet. And then we're going to take partials. So let's close part here. We're going to close 50%. So it was just 2 pennies. We're going to close 1 penny. You have secured something for this trade already. And then price is now pushing. So let's go ahead and also adjust our stop loss. So instead of break even, I'm gonna bring it right above our entry point. So almost like break even, right? There's not much of a difference, but because this candle is still open and is still trying to break past a higher time frame level that we had identified, I know that there's going to be some sort of reaction around this area. So either a retracement of some sort or something like that, where you have to respect this broken resistance as a support before price can continue pushing. So we're still going to give it enough room to kind of hang around this area and, you know, fluctuate as price normally would. So I'm just going to keep it pretty much right above the entry point. But at that point, you're about 85 pips into profit anyways, and, you know, you're still going to get out with a profitable trade regardless. And now we have cleared up a little bit more risk on our end, where we can come in with, you know, a scaling opportunity with more than just 1% risk. Potentially now you have about 2.5 that's available because we just closed out 50. So now we wait for this 15 to close. So there's a few things that you can do here usually based off of the session. So around this time is usually when I would be done or getting ready to kind of just manage my trades and walk away from the charts for the day. I would use higher time frame analysis to understand where else is price headed and what are some of the things that I need to see. So let's start off with the weekly time frame first. So based off the weekly time frame, we had price break the previous weekly low just a little bit, grab that liquidity, push back up into this level, right? So exactly where we have our TP marked off, that's pretty much the level that we have seen even the weekly time frame be reactive to, where you have that support, that resistance, price pulls back down, and then come onto the daily time frame, pretty much the same thing, where you had a nice support being formed here. The previous daily candle broke the highs and lows, so that's that volatility. The new one comes back, grabs that liquidity from down here, which we know was consolidation on lower time frames, and the price flips back up and we're starting to push above these areas. So some levels where you can adjust your TP is, you know, somewhere down here, which is at support, or keep it at the zone that we have it at the moment. You come onto the 4-hour time frame, zoom out a little bit. So same thing here, where price is now approaching a previous resistance area and this consolidation area right here. But given that we have grabbed that liquidity from here, we know that when price approaches these higher time frame levels, so the weekly and the daily levels here, there's going to be some sort of reactive move here essentially. So what that means is that we will exhaust out very soon because we had all that volume to the upside, breaking above, you know, these minor levels here as well, that we need to either consolidate or we need to retrace to grab some more liquidity for a continued push up, if we are going to continue pushing up, right? And so for that reason, you know, you start to make the decision of, I'm about to walk away from the charts. Do I have enough volume where I can let this trade run? Do I want to close it out? Do I, like, scale in would not make a sense at the moment, right? Because now you're walking away from the charts. You would not be waiting for another scaling opportunity. So in this case, what I would do personally, keep my TP where it's at, and then also increase my stop loss to a tighter level, so somewhere down here. And what I'm saying is that I understand that this price is going to be reactive to this 1961 level or even a little bit higher than that, but I would much rather look for another opportunity if price is going to break below here, instead of waiting for price to break below 1961 and then come down even lower and take me out at a lower stop loss level. Does that make sense?
Yeah.
So here what I'm going to do is adjust my stop loss, and I'm doing it based off of the hourly time frame, because again, that was the level that we marked off of the daily, 4-hour, and potentially even weekly. So what I'm going to do is keep it right below that level. I know price is gonna, it has to come back and respect this area of support because it is a higher time frame level. Price will need to come back closer to this level and respect it, but I would much rather get taken out as soon as price breaks below this, because there's a very high chance that we can come back down deeper for a corrective move given all this volume. And then tomorrow you have PPI coming out, rest of the week you have a ton of fundamentals coming out that you can use to look for another re-entry. But at this point, what you have done is grabbed that momentum to the upside from the CPI data from earlier in the week, and now you're much closer to hitting your percentage or your equity increase by the end of the week. And you're freeing up more risk as well. And as we talked about in the last simulation session that Pat was referring to here just a few days ago, your percentages are based off of whatever your account balance is at that time. So I'm not doing the 1% of the $1,000 account that I started off with. I would be doing it based off of whatever my new amount would be. So there's a very high chance that instead of just like 2 pennies, you have a bigger lot size that you can trade with. Should I go ahead and skip through, since we would be pretty much walking away from the charts at this point, and just see what happens?
Yeah.
Cool. Well, let's go on the 15 here. So see, price comes back down into that area. And you can start to see those signs of exhaustion too, but that is another simulation session that we'll do, just so there's not a lot of information overload. So for the rest of the session, we just kind of hang around here. So pretty much all of rest of New York going into Asian. If there was news coming out from, so not much coming out besides GBP data point for CPI, but after that it's going to be quite an easy London session. So that just means that price would be moving more on the technical side, so whatever corrective moves that it needs to do or anything like that. So you would not be trading this, obviously. So now price has come pretty close to that level. Another thing that you can do is, how do you want to manage it? Either you can close it out at that level, or you can adjust your stop loss. So what I would do at this point is, I'm going to keep the same TP for right now, but I'll adjust my stop loss, so I'll bring it up even higher up top here. So I would say somewhere around here, where price has broken above the previous consolidation areas. We're kind of hanging around here. There's a very high chance that we might just end up consolidating until news comes out, or even until New York Stock Exchange opens, and then we move one way or another. Also depending on the type of data that we're looking at. So PPI, for example, we're expecting inflation to increase, core retail sales to drop back down, state manufacturing index to drop back down, PPI month over month to increase by 0.1%. So overall, we're expecting a lot of mixed data points, and so there's a very high chance that we might get another day of volatility here again. So price pushed up pretty close to wherever we had our TP, but right before it hit it, came right back down. Close our trail stop loss. You still close out with 1.78% equity increase, and now you have more that you can come in with for the following days and kind of just scale in more. So we had a lot of mixed data points here, where you had Core PPI, we were expecting that to increase. It remained at the same level as previous, so it did not really change. That's what the 0% means. 0% does not mean that there's no inflation. It just means that it stayed at the same level as previous. Core retail sales, we were expecting it to drop down by 0.1%. Instead, we got an increase by 0.1%. And then manufacturing index, it was sitting in the negatives, and we were forecasting another negative. We ended up coming out to positive, hence that volatility of price breaking the highs and lows, right? And then PPI, same thing. We started to decrease on the inflation side by 0.5%, so slowdown happening here. That's what the negatives mean. Retail sales also dropping down, but not as significantly as we were expecting. So as you can see, a lot of mixed data points, a lot of missed forecast numbers and all of that, hence that volatility. Now, if you were to trade this, for example, and you're looking at, okay, well, how do I take advantage of that? Same thing, how we did not enter on the candle that broke the highs and lows, we're not going to enter on a candle that broke the highs and lows here as well. Instead, you're going to use what is price doing or setting up for on higher time frames, which is that we had a nice bullish momentum, essentially corrected a sell-off momentum here, came pretty close to that zone, right into that level. Now what you're waiting for is price to essentially just respect this area here that we just broke out of. So you can make that as a line, you can make that as a zone, you know, whatever your preference is essentially. But you want price to come back and respect this area here prior to a continuation up. So you want price to pull back a little bit deeper, correct this bullish momentum, and then continue its bullish momentum to the upside. And same thing, your entry points would be above this 1961 mark instead of looking for entry points somewhere down here. And then you would just mark this off as your partial, your TP area. But I do think that if price respects this area here as support, then there should be no problem for price to come up even higher into like the 1994 marks. But all of this was like technical movements. That's what we try to focus here, pairing that up with economic data release and how would you take advantage of that. So instead of getting FOMO on the candles right when the news comes out, you're supposed to, like, not you're supposed to, but you should take entries on the following candles where you have those better trading opportunities. Here we got lucky with the break and retest. A lot of times you might even get an impulse entry where this next candle does not give you a break and retest, it just gives you a bottom wick, flips back up, and then as it breaks those highs, that's where you take an entry to the upside. Make sense?
Yes.
Perfect. So I will see you guys for the next simulation session soon. I'll post when we'll do that. But other than that, I hope this was helpful in terms of just your risk management, how to take those entries, and using multiple time frame analysis. And this will be posted on YouTube to watch, but I will also post this for you guys in the group to watch on your own time as well.
Thank you.
Yeah, have a great weekend.